Hey guys, Kyle here, Mortgage Celebrities Studio. I'm here with Dave Burgio, Trifecta Credit Solutions. Good to have you back.
Thank you, man.
I think this is my first or second guest, so you're much in demand. We got a lot of good responses from your first video because I don't think credit is really talked about as much as it needs to be. And you being the expert, I like to have you in. So thanks for coming back.
Yeah, no, thanks for having me. I'm looking forward to part two because I know that first go around, we probably could have stayed for another hour or two easily.
Yeah. So what's been happening between last time and this time? Any new credit solution? Anything that's come up in your world that maybe you want to talk about? Maybe something interesting. Maybe it was a client you helped.
Yeah, well, one of the things, and I'm glad you brought that up, something important again for everybody, and I'm sure you see it too, is keep a track on your student loans right now. The moratorium July 1st came up, part of, whatever they include. I don't know the whole legalese like with it, but part of the SAVE Act to where things are changing. So from July 1st, you have 90 days. So in October, if you don't have this restructured, or if you don't defer it again, or make the call, right? Just call your student loan, call the government, the provider, whomever it is. Most of it's the U.S. Department of Ed anyway, but they have their little subsets that they have, Mohila, Navient, all that stuff. But just get on the phone, call them, make sure you're good, because I'm going to tell you right now, it was a year ago to when Biden's moratorium was up with that. And then come April, May, everybody had 90-day lates. They were banging on the door, getting ready. Hey, if we don't get this current, then you run the risk of putting it in collections. And I'm sure you guys see that a lot when you're, qualifying people through an underwriting process. Student loans always becomes an issue. So and they do a terrible job of communicating, by the way. So just letting you know now, you got student loans. Go take a look at them, get the dust off of them, and go look at them.
Yeah, how big of an impact does like one late payment have on a credit report?
It's everything, man. Like that is the holy grail. That is the highest weighted derogatory or negative item on there is a late payment. It's 35% of your credit score. So imagine this, right? It equates to 192 points. So imagine what one late payment does, right? It derails it. So now it's a little more forgiving if you have 2, 3, 4, but the idea is not to get any at all. You need that payment history. One thing going back to student loans in terms of late payments, and I don't even know how the federal government can get away with it. I mean, we're not going to go down that rabbit hole, but they don't report monthly lates. They report quarterly, right? So if you're unaware that you have a late payment, 3 months later, you're going to see a 90-day late mark.
I didn't know that.
Yeah, it's crazy, man. That's everything right now. You see 90, 90, 90, right? Like going back to the beginning of 2025, right? When that whole Biden moratorium was up. This is why in April, right? Because March's reporting's catching up to April, then they see a 90-day late on their credit report. Well, that started at the beginning of the year in January, so a lot of people are like 90 days late. Like, how's that possible? That's just how they report it. It's out of sight, out of mind. Like they're not reaching out to you. There's no contact. It's just terrible, man. But yeah, late payment's the worst, and I'm sure, right. For your purposes, once somebody gets a late payment, I mean, they're out of the ball game, even if their score is still lendable per se, right? They got to be out for at least 6 or 12 months.
Well, the thing is the late payment that you see is somebody can have perfect credit, and then I see it with people who make a lot of money and people who make a little bit of money, and this tended to be those people who make a lot of money that just 1 month forget to pay their credit card bill, and their credit goes from 800 to 650 very quickly, and it takes a long time for that to come back. And it's surprisingly long. And I always hear it all at the same time. Like, I was just late once. And it's just like, I understand, like you're preaching to the choir here. And I could tell that it was just a mistake because it's not a pattern.
Yeah.
You do see the pattern sometimes where somebody had like a medical event and, June, July, August, they were late on all these things. And then they caught back up or they lost their job or whatever. And then they caught back up. And that's one thing, and then that's what credit history is for. But when you just accidentally don't have it on auto pay and you skip it, or you got a new debit card or debit account number and you didn't put in that auto pay, and it's devastating. And it means a huge difference in interest rate if you're talking about $800 to $650, obviously. Now, on this side, if you have a late payment on credit cards, installment loans, student loans, auto loans, it's not going to, like if you have it like within the last 3, 6, 12 months, that doesn't disqualify you right away. If you have a late payment on your house, different story. You know,
yeah.
you're going to have to wait at least a year or two before you can do something. But, or rent, like that's not necessarily as big of a deal because we don't always do a verification of rent. But late payments on consumer accounts, your credit cards, it's not the end of the world. So don't stop yourself from calling somebody like me if you're looking for a home loan for that reason. But how long have you seen like that negative impact on a credit report from a late payment? Like, when do you finally get relief from that?
Relief, right? Like little kind of like subjective there. And I guess it depends also on the rest of the data too, because if you're late on one account, you know, what other accounts, right? Usually there's a pattern there. It's sometimes it could be one account, right? Accidentally, like you said, but sometimes it's, hey, I had a tough month or, you know, too much month at the end of the month. So I just let all my credit card bills go for this month. And now you're compounding. But typically it's usually the first 6 months are really hard, right? Like that just takes a beating that first 6 months. You'll see a little bit of increase from 6 months to a year. Usually it loosens up by a little bit more 18 months. I want to say if you are in the fives or high fives or low sixes, usually that 18 months, you know, anywhere between 650 and 700 at that point.
Okay.
But there's also too many other factors because if it's usually, well, I don't want to say too many other factors. The main one probably credit utilization, because what's happened between that point too, if you got late payments, well, that means you're probably getting late fees on top of there. So now you're compounding your utilization a lot. So there's a lot that has to go with that. But if you're doing nothing and it's just paying stuff off, it's usually somewhere in between year 1 and year 2 is where you see that loosen up. Pretty much done by year 3. It might straggle around a little bit, hold down maybe 10 points or something, maybe 20. But, you know, going back to what you're saying, like even on an accident, I don't think, right, as somebody in the industry, I don't think you should penalize people, like even have the negative remark on there for 7 years, right? Because like, I know we're talking about mortgages, but you look at something on the business side, right? If somebody's looking for, you know, an SBA loan or a line of credit or equipment financing on the business side, it doesn't matter if, you know, a derogatory remark, you know, that could derail them even longer, right? Like, all right, well, you had this 3 years ago. Oh, that's a problem. Yeah, well, I've had great payment history since.
Yeah.
You have an old medical bill and say you paid it off and it didn't get removed. Well, you know, well, we got to wait until that completely falls off. Sometimes, not all the time, but sometimes that can happen. And it's like, well, you got to wait all this time for these things to fall off. 7 years after, you know, have handled it in some manner, had it paid off or settled. So, you know, some of those things with holding or penalizing, so a lot can change in 7 years.
100%.
You know, so I never understood that.
No, and it's a shame to hold it against somebody, just a mistake or, you know, 1 or 2 missed payments.
Yeah.
It is something that I think a lot of people aren't taught is like, if you had to pick one of the demons, you know, whether that be credit utilization or missing a payment, don't miss the payment. In my opinion. I mean, do you agree?
100%.
Yeah.
You know, that's I tell people all the time, set it up for auto pay for the minimum, at least.
Yeah.
Right? Like, yeah, well, I like to pay in full. Okay, well, if you can pay in full, set that up for auto pay and pay in full. But if you're holding balances for whatever reason, which you shouldn't do anyway, then set your auto pay up for the minimum, right?
That's a great piece of advice.
Yeah. Well, I think the other thing that people assume, because there is no education on it, right? All right, I get a late payment. All right, now I'm current, I'm back in the game. A lot of people think everything goes back to normal then. All right. So it's like, all right, well, I had a late payment. You know, I could see 90 days. All right, my score's not back. But now month 4, month 5, my score is still bad. Like this late payment was 6 months ago. Like it should be good now. I'm caught up. And it's like, no, that's not how it works.
No.
Like it'll stay on there for 7 years. And then they're just shocked. Like 7 years? Really? Yeah. It doesn't mean it's going to affect you for 7 years, but yeah, it'll stay on there.
That's like literally one of the things. Like, so I was just late once. And it's like, yeah, I understand, but you were late. And it's like, well, that's not right. And it's like, well, the credit report is just reporting what happened.
Yep.
You were late, correct? Yes. You caught up. correct? Yes. Therefore, you were late. You called up. That's what the credit report shows. And it's going to be there for a very long time.
Yeah.
Yeah. So, yeah. So, I mean,
Shock and awe.
well,
and verbatim, man, like exactly what you said that is the same line word for word that everybody says.
Yeah. I mean, I go through it all the time. And when I talk about like interest rates, somebody who's going to call me and think that they're going to get the best interest rate. And then I have to kind of knock them down a peg and just say, hey, look, these things happened in the past. I'm not saying they were right or wrong, but what I'm telling you is that because of that, your score is here. Still a great credit score, still qualifies for a great loan. You called me asking about our best interest rates. Those rates are reserved for people with this credit score. Now, if you want access to those, here's somebody, Dave, that you can contact to try to get your score up, or maybe I give them some pieces of advice. But overall, people think that just because they have a perfect payment history in the last 12 months or whatever it is, that's going to give them the best interest rates. And that's what we're talking about. I mean, just having the best credit score. Don't worry about the past. Like if you did have lates, here's what you can do now. So speaking of that, I had a gentleman recently that had a collection on his credit report. It was from a cable company. So he didn't turn in the cable box. Perfect credit. Perfect credit. Besides, and I mean, had a high income, so he had credit limits of like $20,000, $30,000, $35,000.
Oh, wow.
No utilization, just 0%, pays everything off the end of the month at the right time of the month, so it didn't even report. Perfect credit, a $200, it may even less than $200, but $200 collection that showed up on his credit because he turned in the cable box, he just turned into the wrong place. So his credit score went from 800 to 715, 720. In that scenario, so his problem was he didn't want to admit that, he didn't want to give in to the $200. I'm not paying. I turned in the cable box in his eyes. Like he did everything right. So in this scenario, the choices are pay it off. The choices, or what I found out from you.
I remember talking about that.
The pay per delete. And I didn't really necessarily know that was an option on everything. So give me kind of what you would tell somebody in that situation, what their options are.
Yeah, I mean, or last case, but I don't recommend it because that balance is so low. You work with somebody like us because collections are different, right? Like how they're reported. But for $200, like it's, our time and work and effort's going to probably more than likely
be more than that.
Yeah, a little bit. Now, if you were coming in with 10 grand or 20 grand worth of debt, completely different story. But in that particular person's case, most collection agencies, because I could tell you the cable company doesn't even own the debt anymore. They might, probably not, because you don't really know the chain of custody at that point. So two things with that collection agency: either they're representing that cable company just to make the attempt, or they actually did buy it. They probably did buy it, right? Because that's why I chuckled before. I know exactly that scenario. I see that happen all the time.
When you say chain of custody, what do you mean by that? Just so people understand.
So right, a chain of custody. So any original creditor, right? It doesn't matter if it's that cable company, it doesn't matter if it's Chase, mortgage company, auto loan company, you default on it in some manner, or it turns into some type of charge off to where it's written off as a bad debt. That original creditor, they have the opportunity to either have a company or a collection agency in general, either represent to make collection practices or collection attempts to get it, or sell it to that collection agency for pennies on the dollar. Now they own the debt and they can assume it. The chain of custody is basically from going from creditor to collection agency. What happens in between? Okay, where's the agreement? Where are the terms of service? Now this is where it kind of gets dicey, because technically, and Fair Credit Reporting Act laws, technically you don't have an agreement per se with the collection agency. It's a gray area, right? A lot of people are like, oh, you don't have it, it should automatically get removed. And it's like, okay, that's a piece of it, right? If they got, proving that stuff, right? So what was passed? Was the term over? Was were all these statements passed over? Were any calls, like phone calls that they attempted to that client, passed over? And a lot of times, not every single piece of data goes from creditor to collection agency, but that chain of custody in there, it's taking the file, hopefully all of it, which 99% of the time is never all of it, and then sending it over here. Right. So that's the whole chain of custody thing. But what you can do with most collection agencies, whether they represent the company or own the debt, a lot of them are just willing to settle. Right. They know more than likely, especially for $200, nobody's going to sue you for $200. They're not even like take you to small claims. It's not even a big thing either. Oh, we'll take you to small claims for $200. So you're not going to get sued for $200.
Yeah.
And they know that. So, all right, we have this collection attempt. So what's the next best recourse? Oh, we'll bang their credit up, right? We'll extort them in that manner.
Yeah.
And so they know that they probably, if they spent $50 to assume, that's probably even a lot, maybe $25 to assume that debt or a piece of equipment that's been recycled. So they know that. So the next best thing, hey man, I'll give you $75 if you take it away. You give us $100, we'll call it a day. All right, cool. They're still making money. Yeah. Right. Anytime they settle out, they're still profiting. They're not going to lose. So in that case, they'll be like, hey, or if you ask, or even if it's in their terms of service, whether you pay in full or settle out, okay, great. Once you pass this over, we'll send you a receipt, and then we'll either just automatically remove it, or a lot of people assume that it's going to fall off, but they can legally leave it there, either paid in full or settled less than the full balance, but the collection could still be there and just have a zero balance.
Yeah.
So a lot of people fall into that trap with that.
We see that a lot. So I'll tell somebody to pay off a collection. They don't ask for pay for delete. And it'll show the collection has been settled or paid for in full, which means you had a collection, you paid it, it is a negative on your credit report, you had a debt, you were late on that debt, you defaulted on that debt, you ended up paying that debt, but you still defaulted. Yeah. So it's still showing up on there. And when you pay for deletion, it gets removed entirely. Now, the original creditor, let's say it was Chase, if you had that account on that credit report, it's still going to show that that account had late payments if it was within that 7-year period or whatever. The collection, if it was transferred to someone else, would be deleted if it was the pay per delete in that scenario. Is that?
Yeah, original creditors aren't typically going to do that.
No.
I will say this because I had somebody do this the other day. The Chase, ironically of all companies, they did that for a client of ours that happened to be an authorized user on a Chase card, because he didn't even remember or know who was the original owner of that Chase card. And he's like, hey man, this is really tying my hands here. I need to make a move. I don't even know whose account this is. I said, well, let me figure it out. And Chase is very good and good for them for doing this. But most creditors, they don't want to hear from the authorized user. So I, did some research on it. I said, hey man, this is how you approach this. Okay. And take it from this angle and this perspective. He said, yeah, not only would they remove them off, but they'll even report it and remove the entire account because it had a lot of late payments on it. It's not even his. And it was maxed out at one point, but it was still reporting on there, even though that card was terminated. But if you're the original account holder, you had a bunch of lates, if you let it charge off, I mean, your account's not going to go to collection for specifically late payments. It's got to get charged off at that point. So, but what you want to look out for is make sure whatever collection agency has that debt, if they're, say Chase, will go back to $200, if they're billing you for $200, XYZ collection agency, make sure Chase says zero. Okay. That's a law in the Fair Credit Reporting Act, because it's basically saying now these negative accounts, this charge off in this collection, you're getting billed twice for the same account. So it's making it look like you owe $400 instead of $200. And that's a legal violation. You can actually sue and get compensated for that. Full disclosure.
So going back to what you were just talking about, what is an authorized user and when is it appropriate to introduce that to somebody?
An authorized user is somebody that an original account holder can bring them onto that account. typically credit card, actually always a credit card. So if I had a credit card and it's $10,000, I have no usage on it currently. It's 6 years old, has impeccable payment history, and say you needed a boost or a build or a starting point just in general, or if you're in my business and I need you to do something, I want to get you a card to utilize, like you keep it. I'm going to put you on my account as an authorized user. Same thing with kids. It's very actually good for kids to help them build, even as a minor, right? Like if they're 15, 16, getting ready to become an adult at some point, or a legal adult, put them on the card as an authorized user. But what that does is, and a lot of people use it in real estate, I always say it's not the end all be all. It's part of it. And because I'm sure you see it, some people will try to get approved with just that, and it's not how it works. But it's a way to kind of give you a credit boost right away. So all that data, right, that I just mentioned in the beginning, 10 grand, 6 years old, no usage, no late payments, right? Over that 6 years, that entire history of data will get reported to your credit report, and they will see that. Typically what it does, take kids, for example, they have no credit at all. All of a sudden you give them one authorized user account, you put them on like that. We did it with my partner's daughter years ago. She was 15, I think, when we put her on. By the time she was 18, she had a 740 credit score just from that one card. That doesn't mean you're lendable either, by the way, full disclosure. Yeah. But it's getting you out of the blocks. And what happened? That started getting her offers. The idea is to, when you're using an authorized user account to start it, use that to build off of. Okay. Also, easy on, easy off for the authorized user. However, whoever's the main account holder, like, that responsibility is on you 100%. You don't have to give them the card, but if you do, and I don't think you should, you're on the hook for all that stuff. So if they start getting crazy with purchases and all this other stuff, that could either positively impact you if it's getting paid off, or negatively if nobody's paying it. But it's a good start to help build off of that. Your limits start technically getting a little higher if you're applying for an offer. Not crazy, but it's the idea. Hey, I got $1,000 or $1,500 card here that's mine now. Now I have another one a couple months down the road, and before you know it, usually I teach people a strategy on how to do it within 6 to 9 months with not getting inquiries right away, having their own accounts, and they're still in the 700s even with that authorized user account. Year one, drop it off and just continuously build off of everything that you've built on there so far with your own credit accounts.
Yeah, and just to be clear, I mean, if you're added on as an authorized user, you're dependent on that other person to make their payments on time, like what you were just talking about. So if you're going to take that on because you want that boost in credit, that person may be good today, but that person could have a financial situation tomorrow that causes them to, miss a payment or two, and that goes on your credit report. But like you said, when you're removed as an authorized user, it typically deletes the account in full.
Correct.
Which means that negative history is removed as well. So it's come and go, easy come, easy, easy on, easy off kind of thing, like you were talking about. So that boosts your credit score. A big trend today that a lot of people are using, especially young people. I don't see it as much in the older generations, but young people like my age, younger, to boost their credit, they're adding utilities to credit scores. Rate that. What is that?
I think it's a waste of time.
Okay. Why?
Because I think most of them charge for it to even be on.
A lot of them do. Yeah.
And I know there are other. Well, I think the whole Experian boost. Yeah. Well, you know why I say it's a waste of time? Well, number one, like, take Experian boost. It only reports to Experian anyway, right? It's not reporting everywhere. I love when I see your credit report and I start seeing self-reporting. You see the middle line for Experian and nothing else on the other side. Yeah. But that doesn't, and correct me if I'm wrong, I don't think that shows up because you're pulling a different FICO model anyway.
It does show up now.
Oh, does it?
Yeah, so okay. It does. Yeah. So if we see it on our end, and like you said, a lot of times it's with one, maybe two of the bureaus. There is a couple services that you can pay for outside of Experian Boost where it will report your rent, your Netflix payment, your cell phone bill to 1 to 2 bureaus. You will pay for it. It does add some history. But if you have bad credit, it's not going to be the end all be all. You have to kind of address the previous issue before you can start adding this other stuff. But if you have no credit, in my experience, it's been helpful to add it to get a credit score, because ultimately, as a mortgage lender, the first thing we look at is credit score. Do you have a credit score? Is it a qualifying credit score? The second thing we look at is some programs require that you have a certain amount of trade lines.
Right.
And those trade lines are
Mixture.
quote unquote legitimate trade lines. They are a credit card, an auto loan, a student loan, a personal loan, something that falls within those categories. Utilities, rent definitely counts.
Yep.
But your Netflix payment doesn't always count.
No. And that's what I mean. Like, how are you guys underwriting it? Because back in the day, right? And people are blown away. This is, I know I don't want to get too wayside here, but this is why I don't get crazy with credit scoring. Because if you look at Experian and what the model that they show on their own platform, right? It's FICO 8 consumer model, all right? Like real estate, like that FICO model, you guys are pulling 2, 4, and 5. So it used to not even show on those models at all. It's like, hey, I have all this stuff reported here. My credit is this. Like, how come? Well, I got this utility on there. I got this bill that I pay for, that bill. That's why I always told people to stay away from it, because it was a money grab, right? And I still think there are better ways to build long term. What happens if you move out of that house and you move in a new house? Are you going to put your med ed bill on there? Probably not.
Yeah.
Netflix, you got to carry that over. What if you cancel it then? Because some of these ancillary things you're not going to keep forever. But, my rule of thumb too, like you said, trade lines, always 3 to 5, I say, bare minimum. You should be going after 5. But I like things that are going to look good and mean more, right? Like, you're spending $10 a month on streaming service.
Yeah.
Like, okay, that's like getting a cup of coffee. And I don't know this, like how much I'm sure you'll see it from bank statements anyway, but even putting all this stuff for DTI on there, what effect does that have? That's always been like my question. I always think like put the more important things on there and keep a mixture, right? That 3 to 5. Get rid of that silly stuff. Rent reporting is a big one. I actually like rent reporting a lot. We have a good service or a good partnership that we utilize where ours actually shows and is branded as a mortgage trade line. Yeah, it's pretty awesome. And shameless plug, you can look up BoomPay or reach out to me. I'll send you a link. But it's very, very inexpensive. It's $25 a year, right? A year. You can pay an extra $25 for it to have it backdated for 2 years. So now you're getting some time on it. It's never going to show up late because it runs through Plaid, right? And those of you that don't know what Plaid is, it's like a bank connector. Every major bank uses it. So if you have your lease agreement and you pay either by check or through ACH or whatever, Plaid can see based on the lease agreement that payment's going to that landlord, you're going to get credit for a mortgage payment, essentially.
That's solid.
Yeah, it's awesome, man.
For $50.
For $50.
You get 2 years history.
Yeah, for 2 years. And we'll never report late because why? Yeah, pay it. I'm not saying be late.
Yeah.
But pay it. And the reason being you'll either be late or NA, like unavailable. Why? Because they don't know when that landlord's either going to deposit it if you're paying him by check. That's typically why. ACH, obviously, it's like an auto pay thing at that point.
Yeah.
Right. So it's a no-brainer with that. So now you're having a mixture. I always say if you can get rent reporting, get it get it through us because of how it's reported. If you get the installment piece, get a self lender, whether it's through Self. Credit Strong is a really good company now that actually has a couple different products on there besides their own version of a self lender, and 2 or 3 credit cards. Right? Definitely your own. Don't authorize user out. Yeah. Get 2 of your own, even if they're both secured, right? Start that manner.
What's a secured card?
Secured card is you're securing that limit basically. So if you're coming in, hey, I want to get a card, I have bad credit. What's the cheapest I can go? So most are 200 or 300. I say try to shoot higher if you can because it's going to look better, at least 500. But you're securing that limit, $500 deposit. That's my limit. If you default, they keep your money. Most of these secured credit card companies, and Discover's very good at this. After 6 months, they'll turn it unsecured. You have very good payment history and all that, and you're utilizing it. Okay, well, you've been in for $500. All right, we'll turn it $500 unsecured. Meaning they're going to give you your money back. Or a lot of them, what they'll do is they'll offer you an unsecured card in there. Hey, thank you for $500 secured card here for the last year or two. We pre-approved you for this $1,500 card, and take it, either cancel the secured card or keep it as well.
Yeah. So the secured card, just to be clear, is for people with no credit or bad credit.
Yep.
Who can't otherwise get a card. They're making you take your own money and borrow against yourself.
Pretty much.
Essentially,
Yeah.
here's the $500. I give it to you, and then you lend it to me when I ask for it.
Yeah.
It's a great tool for somebody who's kind of down and out. Doesn't have the ability to get a credit card anymore because whatever event happened, they weren't able to pay. What was the other part? So I did want to ask about something else in the industry. Because we talked last time and you were talking about different types of companies. What's something that you consider like unethical or risky that other people do that you try to avoid?
First of all, it's not even trying to avoid, like you avoided it 100%. And I hope either God's going to punish me one day or he's going to be good job, faithful servant, because I have a library that I'm debating whether or not to come out to call out people that do bad in the industry. You think my content's good or decent now, wait till you see. And I have no qualms about it because it's telling the truth. Like it's not, they say the truth will set you free.
Yeah.
Right. The stuff that I see on a daily basis, and I have a couple people I'm friends with in the industry, and I send this stuff back and forth to them, and we just laugh because eventually it's a house of cards, man. It's gonna not only are you doing a disservice to clients that trust you and entrust you to get them in a better disposition, you actually could potentially put them in serious danger, legal, like criminal danger, and yourself for doing these things. So there's no trying, man. It's either you do the right thing or you don't.
So what are these things?
If you see anything that says sweep, run away as fast as possible. Yeah, credit sweep. Or we'll get everything removed off your credit report in 7 days or in 14 days. Or we'll have you back clean credit in 30 days. Run away. There's a combination of things. And there's still people that market this to this day. If you look up, you can even Google this. If you look up credit sweep, like indictments.
What does that mean, credit sweep?
Credit sweep is basically what you're doing is using certain things that can tailor to a person that's been a victim of something because of that to get it wiped away. I'll give you two great examples. The one that everybody knows and doesn't think of, identity fraud or identity theft victim. Okay. If you're really going over the edge. Now, I know there's some people, like we did it when it happened because there's a law of it. Like when Equifax had its data breach, which they've had 2 of them now in the last 10 years, right? You're leaking millions of people data. Well, you can find out through, I forget the site.
The site.
Yeah, the site off the top of my head.
Plug the site.
Yeah, you plug the site in there. But the specific site that you go on there to see if your stuff was leaked. Well, you can put out a warning. Hey, like you're not a victim of fraud or identity theft. You're putting awareness. Hey, just to let you know, like my name was on the breach. But a lot of people take this a step further to where they're like, hey, I've been a victim of identity theft. Okay, fill this affidavit out. It's one thing of putting it out, then taking the step further of filling or filing a report and putting it on there and putting all these fraud alerts on your credit report and putting this alert and that alert. One of the things that, and I think Equifax will probably might get burned for this too, but even them putting it when you're questioning them on the leak. So stop putting like fraud alerts on there. But if somebody's blatantly doing it, it's coming up everywhere. You're filing affidavits admitting that you're doing it. The crazy thing is the client has to sign that too. So are they playing dumb or do they really know what they're signing? Are like, all right, I just got to do what it takes.
So what
to get
you're
a credit
saying
report.
is that
Filing a false report.
They have negative stuff on their credit that happened after this data breach. And this company is essentially saying, hey, we're going to help you try to lie and basically say that this was from a identity theft.
Yeah. Well, it doesn't even matter the data breach now. They're just doing it in general.
Okay.
Right. So a lot of it like stems from that, like from these data breaches. Or now they just say, hey, I'm a straight victim.
It's almost like somebody goes out in their house, they fall down the stairs, they break their neck, they get into the car, and then somebody gets and hits them, and then they go, ow, my neck. Like that's kind of like
slip and fall.
Yeah. So that's kind of they're trying to
Yeah, but they're not like the hard time I have with it is that scenario, the client knows like it's wrong. In 2021, the other one, so in 2021, you know, sex trafficking, yeah, I'm going there, is a real, yeah, is a real big thing in this country,
Yeah.
right? It really is. So Biden in 2021, when they put this, passed this bill through for victims of sex trafficking and all this stuff, part of it, these victims that were trafficked, their basically identity would be stolen like right in their face. So whoever the criminal basically, taking them victim, hey, what your social security number? We got to now take all these cards, rack up. They have good credit, and it's a real thing. Like it's a real thing.
Yeah.
However, everybody has their scam artists in the industry as well. So people in my industry started finding out about that. And it's like, okay. So if we can, because what Biden put in, if you are a victim and they also, quote unquote, used your identity and somehow, you can get that all wiped out. So people in my industry started finding out about that. And hey, we'll get your credit fixed in 2 weeks or in 7 days. We'll get a credit sweep. This is where the sweep word really comes in. So they'll file a report now. Imagine, somebody like Trent Williams, left tackle for the San Francisco 49ers, who's like 6'8" and 350 pounds. He's got bad credit and he comes in. Sorry, Trent, don't kill me. But he has somebody file a sex trafficking report on him. Yeah. I've been a victim. I'm 6'8", 350 pounds, and I'm a victim.
Yeah.
Really?
Yeah.
But this is what's happening. So then everything gets wiped out. And people are still doing this today, by the way. But what's starting to happen and has happened over the last couple of years, you can look this up too, is that the federal government, the FTC, the FBI, they're cracking down on people for doing this because they're going to go back and do an actual investigation to make sure this happens, because it's that bad that they're diving in hard now. So yeah, you might get it removed today. That's great. But 6 months from now, it'll probably pop back on there. You're going to have the feds knock on your door. They're also going to do an investigation on you. But there are a lot of people in the industry, there are companies that were doing these practices that they're going to go down. And they're starting to, and it's a matter of time to where, some like 60 Minutes will probably shed some light on it. And it's crazy. It's crazy.
That is.
Yeah. You're filling out a letter and you're filing an affidavit for that too. Like these are legal documents. So I don't give all the bad to the credit repair company or consulting company. That client knows what they're doing. You can't tell me if, hey, this is an affidavit to sign that you are a victim of this. Well, what's this? What? I'm a victim of that. Yeah. Hey man, you want your credit fixed? Just sign it.
Do you accept the terms and agreement?
Yeah. And it's crazy that people will do this. And there are still people marketing this craziness today.
That's an insane thing to market. Number one.
You're going to go on Google after this for next
I
hour.
have to see who's doing it, but that's an insane thing to market. And man, there's no quick and easy solution, no quick fixes in life. It's just not. And if you do there's an old quote, the hard thing and the right thing are usually the same. Yeah. And that's 100% true. You have to go through the wall to try to get, the stuff fixed. And a lot of people, I get people who come to me and say, well, I was a victim of identity theft. And the first thing that I always ask is, can I see the police report? Because that's what underwriting is going to ask for. So if you're listening out there and you have been a victim of identity theft, make sure you go through the proper channels, file a police report, get that stuff taken care of, because that's the first thing someone on my end is going to ask for. Yeah. The second thing that I cannot stand, that, and I asked you this for a reason, because I know last time we didn't touch on it, but debt settlement is one of these things where, so many good people get scammed into this. And it's not a scam. They say they do what they say they're going to do, but
I got another one.
They don't tell you what the negative outcome is going to be in the short and long term.
Yeah.
So what's debt settlement?
Debt settlement, and there's a lot of confusion even around that, how it's worded, because you have debt settlement, you have debt negotiation, and you have debt consolidation. And most people think they're all the same, right? Two of them are the same, but one of them's different.
Debt consolidation, good.
Yes.
Yes.
Debt negotiation, debt settlement, it's not that it's bad, but it's meant for the right person and situation. And most of those situations are terrible. 99% of people should not even cross that bridge. I have a story from yesterday, and we'll get into that to where you want to take it a step further. This will blow your mind. But debt settlement and debt negotiation. First of all, most people don't know if you have a hard time with your bills, your credit card bills in general, you can call these companies and ask for some type of hardship or say you're in a hardship. It's getting a little harder now because debt is so bad that the original creditors actually want you to be late and behind. And it's pretty crazy to hear them even say that. But a lot of the case that is, well, hey, you're not late yet, so pay the bill, right? We're not going to work with you, until you're 60 days behind or 90 days, then they'll start working with you. But a lot of times, most people could do this themselves. But what these companies do is they'll come in, and this call yesterday was a perfect example. Somebody was overextended. It's 99% for credit cards. Mm-hmm. You're not going to see the auto loan. You're not going to see an installment loan in there. Maybe an installment loan once in a while, but no car loan or anything like that. It's always for credit cards. So, most people that are just overextended are looking for a way out, and they're assuming that that's the way. Hey, I have all this problem. The interest is killing me. I can't get out of it. My credit's still actually half decent, maybe 660, 670, and I'm just overextended. Okay, stop paying. That's the first thing they say. Stop paying right away. Take the next 4 months off. Let them charge off. Really? Yeah. And then, hey, my credit score's dropping. I'm late. Okay, well, I got to rebuild. We got to follow the plan. So now that's charged off. So now what these companies do is they come in, take all your debts, they put together their own contingent plan. Hey, this is what we're expecting to happen. And on your behalf, we'll reach out to these companies. We'll do some type of settlement. We typically shoot for 50%. So now, essentially, you're getting a 50% discount, but there's no more interest being added, no more late payments, any of that stuff. They're all charged off. Okay, great. And then, obviously, our fee tacked on typically 25%. So you're really getting a 25% discount for something you could do on your own if it's the right thing to do. And that's the key word, if it's the right thing. So typically, hey, you pay us $300 a month, whatever it is, 10 grand is the total payout over the next 5 years. And then woohoo, you'll be debt free in 5 years instead of 30 going at the plan you were. Oh, okay. That sounds fantastic. Okay. The problem with what they don't tell you is what happens once that's satisfied. Okay. And this is where you piss a lot of people off with this. So what happens, right? First of all, as you're making payments over time, the original balance for what you owe that creditor does not move until it is 100% satisfied. So say for example, if you have Chase on there and it charged off for 10 grand, but they negotiated and settled, yeah, we'll take 5. It's still going to say 10 grand on there. And it could be for the next, if you're in it for 5 years, until that 5 years, or if one of your payments happily or just so happens to zero it out, it's not going to go down as time goes on. Well, that sucks. Like, what are we doing with that, right? Mm-hmm. And then the next thing that they don't tell you, well, now say everything just goes to zero. What happens once you're done? Okay. We talked about it earlier, the original creditor. The original creditor is still going to be on there. The balance is now going to be zeroed out. Great. It's going to say that it was settled. So cool, I'm out of debt. But what they're not telling you is now you just created that data last activity. You're taking the change, right? If it was 10 grand, you sell for 5. Now it's 0. Okay. You're changing that activity to today. So they're not going to remove the item. So it makes it look like a brand new derogatory negative defaulted account, 0 balance, day one started today.
Yeah, 5 years after you've been paying on it.
And now another 7 behind it. So you're going to have this dead account on there for 12 years.
That's going to show late payments that whole time.
Yep.
Yeah.
Yeah, man. And it's a trap that people get caught in because now being branded as a new account, they could be, and bless this lady, man, like this is always the conversations I don't like having, but I reinforce it because you can also get out of that. You don't have to stay in it.
Correct.
You're never contracted to stay in there. You can get out of it anytime. The only thing is any money you put in, you're probably not going to get it back. So that's always the downside to it. But yeah, man, like you did all that work. Your score was up here all of a sudden. Now it gets rebranded. Now you lost another 100, 150 points just like that.
Yeah.
Because you assumed morally and ethically you were doing the right thing, which you were,
Yeah.
in a sense.
Well, again, it's one of those things where, like, in my mind, if somebody called me, it would sound a little bit too good to be true. What do you mean I get to pay less than what I owe? How does that work? And like going late on these payments is a big problem. So versus the debt consolidation, which is a little different. Let's say you have, 30,000 in credit cards across 6 different credit cards.
Yep.
This company takes and manages your payments for you. You pay them a certain amount, and they will make sure those credit cards get paid down. And it takes longer, and it's harder. It's it's more out of pocket, but the hard thing and the right thing are usually the same.
Yeah. But debt consolidation alone, right? Like we've, in our realm, we've jumped into a lot of that. And really it's just another word for, having other banks or fintech companies that do larger unsecured loans. And that's something we've helped a lot of people with. So if you hear debt consolidation loan, don't confuse it with that.
Yes.
So you're taking all those credit cards, you're rolling that up, say 30 or 40 grand. Most traditional banks won't touch that stuff if it's over 15K, right?
Yeah.
Like we're not going to do that. We need, for bad debt, we need some type of security behind it. There's that word secured again. But if you have these companies or banks that specialize in that, hey, 40 grand in debt, okay, we'll roll it over into a debt consolidation loan, an installment piece. Now you're going to be out of debt typically in 5 years, right? You're going to save anywhere. The average is like $300 to $500 a month, okay, in payment. Your interest is going to be a lot lower. And I think the thing that everybody overlooks, you're going to change your credit score overnight once that rolls over.
100%.
Because you're at 50% utilization. And by the way, when we structure, we make sure those credit cards don't close. You don't want them to close. You're going to drop it anyway. I'm not saying go out and have a spending spree either, right? But your credit score is literally going to change overnight. Okay, deal done. Roll all that debt over here. Now you go from 50, 60% to zero. And then that shoots your credit score through the roof.
Yeah. Well, listen, I mean, like last time, there's so many different topics that we can touch on. I think this was even better than last time just because, we're hitting on some of those topics that maybe ruffle some feathers out there as far as like what these bad practices are. But people need to know that, some of these things are going to be long-lasting decisions that they're going to make.
Yeah.
They should be exploring all options before they ever make a decision. Talk to a credit specialist like yourself before ever jumping into any contracts or anything like that, because it's just not worth it. If it's going to last for 13 years on your credit report, it's like that's.
Yeah, it's crazy. Real quick, I want to touch on that individual I spoke to yesterday. She was in debt consolidation for nothing even crazy, $6,000. And then the same company has a lender behind them that does for bad loans for defaulted stuff. And it's like, well, your credit's bad. How are they giving you that? Well, this is what they offered me. It's their in-house thing. So we're going to roll it to that. So I'm not in the program anymore. And I'm like, well, wait a minute. You're not paying any interest on the debt consolidation loan, but you're going over here. Well, what are they charging you for interest? Well, they're marketing it. My payment's going to be cut in half from the $350 I'm paying them now to $150. I said, oh, so that tells me you're probably going to be in it for X amount of even more years, right? And how much they're charging you interest on that if your credit stinks, just to save you $150 a month, you're never going to get out of it.
Yeah.
So there's that thing going on now. Hey, you're in a debt consolidation program, roll it into this quote unquote high interest loan to save you half your payment a month.
Hey, we know just the guy.
It's our sister company over here.
Yeah.
It's crazy,
I know,
dude.
Dave. Yeah, no.
No, not that. This is that lady,
yeah.
man. Like our stuff. So debt consolidation loans with us, it works if your credit still has to be good. You can't have any negative items, right?
It's before you started the downfall, missing payments and everything. If you're at the peak where you're like, I'm almost to the point where I can't handle this anymore, like that is a good, because your credit's still okay. You haven't missed payments, but that's the time where you got to call for help.
Yeah, not if you're in a program already and it's like, hey, we're going to rob
kind
Peter
of already
to
too
pay
late.
Paul. I heard that was the first time I heard that one, and I'm like, well, how do you get away with that?
Yeah,
like you're double dipping somebody terribly. And I said, don't do that. I said,
well,
please don't do
where
that.
can people reach you?
Yeah, you can reach me or find us. You can find me directly on social media at Dave Burgio, Burgio on all social media platforms. You can find our company, the brand. You can find us at Trifecta Credit Solutions. www.trifectacreditsolutions.com. That's our website. I think the last time I was on here, I threw out my email. You can reach me directly, dave@trifectacreditsolutions.com. Like, I'm easy to find. We're all easy to find. We put out tons of content. Like,
Yeah.
we're easy to Google. Like, we actually do have most of these companies don't even have a Google page, man.
So, a lot of times, just providing education to people is like my purpose, and like the real estate and mortgage space, and you do that in the credit space, and you do it for free, in your posts and everything. So
thank you.
If you have questions, reach out, people.
Please.
Thank you, Dave, for joining us. Look forward to having you again, and I guess we'll talk to you next time.
Awesome. Thank you, Kyle.
Yep.
Thank you, everybody.
Take care.